What's going on, everyone? I'm Encore. This is Tomorrow Never Comes, and in this video I want to go through literally how you can go assess any crypto project in 10 minutes. All right, now that doesn't mean it happens right away. Once you get comfortable with the 5 T's here, you can generate much more speed getting through these projects, but it just takes time, like with anything, a little repetition. But stay till the end. The last slide I have up here is going to actually go through how you can actually condense this even further. So now I can get through maybe 5 minutes per project, and then if I decide that I want to take some additional time, I definitely can. All right, so hopefully you guys stick through this. But let's just jump into reason why you would even want to be in a crypto project. Many people, myself included, when you come into the space, you trade or you look to buy just the crypto assets alone. So whether it's the currency, right? So you're looking for Bitcoin, ETH, AVAX, Algorand, any of those currencies that are out there, the tokens that are out there. That's all you know. That's all you hear about. That's all you get into. Whether it be metaverse or some other play, that token is what's easiest to look at and monitor, and it's 24/7. So you're always looking at it. But going through this now for a few years, and now we're in a market where those currencies are not doing well at all, right? They've all cratered quite a bit. What do? You just kind of sit and hold? Do you wait? Do you get out? Right? Now, human psychology is not the greatest, because we, instead of buying low and selling high, we tend to sell low and buy high. It's just the way it is. But what can you do in these types of markets where the current market does not necessarily dictate the price point that you're getting at? And that's still nuanced. That's still nuanced, okay? You're just not having to deal with the volatility. You don't have to go on an exchange and look at your portfolios down another 10%. Tomorrow it's up 2%. Think of this as like getting into something before it IPOs, okay? That's exactly what it is. There's just different things that you got to look at. Some, quite a few similarities, but some differences to kind of get through. So I want to take you through 5 T's, the 5T test, and just to quickly get through the 5T test, so you guys can apply this if you're going to go look at other projects that you want to invest in. So remember, these are not tokens on an exchange. You cannot get them unless you speak to these founders of these projects, or they come to you themselves, or you reach out to them on your own. And cold emailing or cold LinkedIn messaging is a thing. And I'm going to go at the end kind of why you should go now and speak to them. But let's get through the 5 T's. So the first one is team. All right, I want to get through this one here. And it's very important. This is where the similarity lies in terms of pre-IPO. So traditional, startups versus the crypto startups. All right, you got to look at the team. All right, now obviously you have the background, the experience, all of those things. But what is this doxed? What does that mean? Well, in the traditional finance space on the left, where it says meet our team, you'll see the names, the faces, a little description about them, a little background on them, and then even some links where it comes to, hey, you can see my LinkedIn profile, or whatever else they may have links to, but you've got a face to a name and somewhere to go to kind of research them. All right, in the crypto space, that does happen, but there's a lot of them that actually don't. Okay, so docs just means that they're putting a face behind the name, which is what the slide you see here on the left hand side. But many crypto projects will have a name, but then they'll have an NFT as a profile face. They'll have an avatar. Okay, and that's where you kind of have to be a little bit suspect. It doesn't mean the project is not valid. All right, this is just a criteria to kind of get through certain projects faster than others. All right, so for me, if I can't see the face, that's kind of a big no-no for me. All right, again, it's new age, it's edgy in terms of showing your NFT as your profile picture, but it just doesn't work for me if I'm going to invest in something. I got to see it. And if they have a link to their LinkedIn, that's even better. All right. Now you get hybrids as well, okay, where they'll have this, but then they have link to LinkedIn and all that. So that's a gray area. But usually if I want to get through something quickly and I'm looking at the team, I'm looking at, can I see a face behind the name, and is it legit? All right, and that's when I'll follow down the trail on LinkedIn or any other social media aspects. So that's 1 is team. 2 is traction. All right, now Here's where things are a little bit different when it comes to, well, not a little bit, quite a bit different from traditional finance or traditional startups, is that there usually isn't a social media presence when it comes to startups. You're just looking at the users, the partnerships, revenue if they're generating any. But here in the crypto space, community is such a key part in any project having some legs and getting forward to where it wants to go. And so social media is a very big criteria when it comes to things that I look at in a project. So followers is one thing, but you can easily get by followers. You can have bots that engage. So I have engagement there as well. So that's fine. So you kind of have to dig a little bit deeper, right? So, first of all, who's following them? Are there any big names following them? Are there any well-respected names in the crypto space following this particular project? Are they speaking about it? Are they tweeting about it? If we're going to talk about Twitter, right? Are they engaged? And then in each individual post they have, are they getting engagement through it? Are they getting comments? Are they getting likes and shares and all that kind of stuff? So just kind of digging through there. And Discord is a very big one when it comes to the crypto space. So how many members do they have? What's the engagement in there? Is there a lot of chatter? So, those things really play a big role when it comes to the 5 T's for me. Okay, on to number 3 is tech. Now, obviously, some similarities here in traditional finance is, do they have an MVP? Do they have a demo? Is it live? Do they have as an app? Is it a website? Is there something you can play with to kind of see if the tech works? It's very simple to do. What's their unique selling point? Is it a tech feature or is it something else? And then in the crypto space, what specific layer? What are they being powered by? Is it Algorand? Is it Chronos network? Is it the Avalanche network? Is it the ETH network? I mean, those are some of the things you want to look at. Are they building on a network? Are they a layer 2 solution? Are they layer 1? What are they trying to do? So those things will play in. And you want to see if what they're building on or being powered by, is there traffic on there? Are there bigger hiccups on one versus another? So just real quick, and that's going to come with some experience in the space. But it really is just looking at, okay, what's powering them? Are they on a platform that I think will have potential going forward and less hiccups? So that's number 3. And then number 4 here. Okay, so this is one which, when you look at it, really seems confusing if you've never seen this before. And I could literally spend an entire video just on this, and maybe I will one day. The tokenomics. So for every project, I'm not going to say every project, but the ones that I'm interested in usually have a token associated with it. It's a native token. And so what does that mean? Well, there's usually some kind of utility or governance or something that comes with this project that they give to their investors and their users that'll help the community build, help the project build, and also have some benefits for the investor. Okay, so if you want to think of tokens, you can think of it as kind of like this is a very simple way of thinking about it, but shares, kind of, right? I mean, very different in certain respects, but just from concept perspective, if you think of it as individual shares in a company, right? So you want to look at what's the price of the share, right? What's the fundraising aspect of it? What round are we in? Are we in pre-seed? Are we in seed? Are we in a private sale? What's the deal? How are those shares going to be distributed between the team? Here it says advisors and research, and so you just want to see that the distribution of, in this case, tokens. Who's it going to? And then you want to look at, well, what's the maximum supply? Is there a maximum supply, or is there an infinite amount of supply? If there's an infinite amount of supply, you can be diluted an infinite amount. That's just kind of how it works, right? So you typically kind of want to see some kind of cap on it, and then what round are we in, right? So are we, if you look here on the right, are we in a private A, well, this one's saying private A, private B, public sale, but even down here you can say, is there a seed stage? Are we in the seed stage? So is this before we're going public? Is this pre-seed? So it's like a friends and family round. So the round matters, the price of the token matters, the ability to be diluted and to what extent matters, okay? And then I have something here called cliff and vesting. Okay, so this is exactly the same in traditional finance or with respect to shares, is that when you get in early, if something is not public, they'll say you get an X amount of shares. You're not going to actually get them, over a 3 months, 6 months, 9 month period, whatever time period is, you won't get them, but they'll be accruing, okay, at a certain rate, which will be accumulated kind of like in the background or in a trust, or in this case with tokens. But somewhere, somehow, the ledger is still rolling that knows exactly how much you should be getting over a time period. You're just not going to receive them. Okay, so if it's a 6 months vesting schedule, you don't see anything for 6 months, even though it's kind of being piling up in the background, in this case tokens. And then once it gets released to you, then there's a vesting schedule. So you'll have 5% every quarter or every month of your total will then be distributed to you. So all those things matter. How quickly are you locked up for 4 years and you'll never see it? You can't get access to it. And one of the things here to remember is you should kind of have a long-term mindset. So the vesting helps you in terms of getting some liquidity back if need be, but it is a vesting. You're not going to get all of it. For the most part, they're not going to say after 6 months you get all 100% of it if you're getting in early, because they don't want to see you dump the tokens on the market and really crash the price. They don't want to see that either. So all of these things you kind of have to take into consideration, okay? And this is one of the big ones for me. Number 5, I should say, is terms and conditions. Now, I'm not going to get heavy into this. I just left it as legal details. All the stuff that most of us do not enjoy reading. That's the legal jargon that you kind of have to see. Are there any things that are kind of snuck in there that'll prevent you from doing things, or overly restrictive? Really, it's just about, is there a standard? Are they following a standard, or are they kind of increasing the standard, and does it benefit them more than it benefits you? So all those little nuanced things you just kind of have to read through. All right, but I promise you guys that there's going to be a 3T check that I enjoy. And the whole point of this is, can you get through a project fast enough to determine, do you want to even see more? Okay, and then see more also then translates, do you want to speak to the founders and get more ideas, and then find out if this is something that makes sense for you to invest in, even just from a financial perspective, like what's their minimum investment, all that kind of stuff, right? But that's something you can address on a call or a follow-up. This is really, hey, you reach out to somebody or someone reached out to you and you're like, send me your deck. Okay, and the deck meaning this is their presentation. This is what a company does or a project does, and should hopefully outline the 5 T's, and then you kind of have to assess, is this something I want to look at further? And so here's the 3 T's. You can literally do the 3 T's in 5 minutes, where all I take care of is team, traction, and tokenomics. Okay, now we ran through all of them. Obviously, tech is there, and you can decide which T's work best for you. But for me, this is really just something that weeds things out quickly, and then I can always circle back up and see more. All right. So team, traction, and tokenomics, those are my favorite things. And number 1, if you had to pick just one, I would go with team, because no matter what the unique selling proposition is, no matter what platform they're on, can the team pivot if need be? Can they execute? Right? And those are some of the things, and that is something that's similar to traditional finance, right? They always say you bet on the jockey, not the horse. All right, so that's you're betting on the people who are driving this project, which is the horse. Okay, and I promised in the beginning that I said I want to tell you guys why you should get into private investing or pre-seed or seed investing. Because the bear market does not, because you can't check the price on 24/7 basis, it hasn't been launched publicly, you're usually getting an amazing price point. And then every time they raise the round, or they go to the next round, or they go public, you have a pretty good chance of at least 3xing or 4xing your money, which is pretty good, right? Now, obviously, there's a whole vesting portion of it. But when you buy a currency right now, doesn't matter which one it is, you are subject to immense volatility on a 24/7, 365 days a year basis. Here, you set the conditions, you're locked in for whatever the amount is, and then you just kind of ride it out over the long term. So it's less headache, less stress in that respect. But also, because it hasn't been launched, the ideas haven't been flushed out, it is risky. It could go to zero. So you always have to keep that in mind, that whatever you invest here in these projects could always go to zero. Right? So I want to make that very clear. And so there's always a portion of how do you get these deals. Okay, and you can cold email, you can jump on LinkedIn, you can be in social media, and jump on these projects if you hear about it through other tweets or whatnot, and then just kind of interact through social media and just engage. Really, I would say the biggest and best thing about cryptosphere, the entire space, is the level of engagement, the level of community building, the level of openness that every community has for someone who comes in new. If you just say, hey, I'm so-and-so, I'm new to this community, I just want to learn more about it, you're going to get all kinds of help. Okay, and then if you want to transition that into, hey, I'd like to invest, all that kind of stuff, then then you just kind of learn the ropes of seeing the deck, going through the 5 T's, and then diving deeper and getting on the calls and fleshing out the opportunity if there is one. All right. So those are my 5 T's with a recap, with little Cole's notes. If you guys are old enough to know what that is, but just a little bit of rehash when you take the 5T to the 3T and kind of quickly get through all those things. So, but you got to find the T's that work best for you, and you got to have a system where you can just weed things out quickly, know which ones to focus on, and which ones either you come back to or you just can say no right off the bat, and that just takes time. All right, but super important, especially as we are in a bear market. The earlier you can get in, the more the riskier it is, but the benefits could far outweigh the risk. All right, and you don't necessarily have to put in a heavy amount of capital to see a significant amount of gain. All right, so hopefully this all helped you guys. I want to just kind of rehash the 5 T's here. We've got the team, we've got traction, we've got technology, we've got tokenomics and terms and conditions. Okay, my top 3 are team, traction, and tokenomics. All right, so guys, remember, tomorrow never comes. Take action, invest in yourself today, and I'll see you guys in the next video.